Welcome to Forex School Uganda. If you're new to the channel, kindly subscribe, like and share as well. Today we are going to look at the DAX or the German 40. If you're a lover of indices like the Nasdaq, the US 30 or the Dow Jones or the FTSE for the UK, come check out with me what the DAX is like. The DAX is a German stock index, and it's very interesting to trade given its volumes, especially during the European session. And today I'm considering taking some trades on it, and I would like you to come with me, check out the charts, we analyze, break down the market structure, and then see how we could take advantage of whatever is happening in the market today, especially for the DAX 40. Let's go. This is the German 40, or you could call it the DAX 40. It's an index from German, just like you would see the Nasdaq 100 and the FTSE 100 for the UK, or the US 30 or the Dow Jones. But now, particularly, this is the German 40. It is an index from German. And looking at the monthly time frame, what we see is that some months back, price broke and above this resistance area to the upside and has been moving impulsively since. However, last month we saw this bearish candle drop to the downside, retracing some ground that had been covered by the impulsive move to the upside. And currently, with this month that is closing, we see this candle is pushing to the upside. However, the things to take note of is the candle is still in motion, but it seems to be rejecting this resistance area that was formed by the bullish and bearish candles put together. They created an area of resistance, and this current running candle that has just today, before it closes, is coming against this resistance that was created by the two candle formations, and it hasn't yet been able to break above. But currently, as it stands, coming into the resistance, if the resistance is compromised, we have a bullish bias. Now, dropping to the weekly time frame, what we see is price created an area of minor resistance here and another area of minor resistance here, but it took just one momentum candle on the weekly time frame that we are on now. It took just this weekly momentum to break above both this minor resistance and the stronger resistance to the left. Right now, what we are seeing is a retracement. Now, like we've already said, the market does not move in one direction, but it moves in waves. It moves forming higher highs and higher lows in an uptrending market, and lower lows and lower highs in a downtrending market. And what we saw here was an impulsive move to the upside, and currently we are experiencing a correction. And if you look closely, you realize that it is actually testing this area of previous resistance, but now turned support. So it is coming into support, and the candle is still running, but it is testing this area of support, and we could see support hold this price to the upside. And so, in simple terms, this was an impulsive move followed by a current correction, because price is currently in a corrective phase. Now, if we bring our Fibonacci tool to this weekly time frame, measuring from the low of the impulsive move to the high of the impulsive move, we see that price is testing not only this area of support on the weekly time frame, but also the 38.2 Fibonacci retracement level, And so these two act as a confluence for price to be rejected. However, just notice that this candle is strongly bearish, and so like we've already said, we do not predict the market, but the best we can do is just to do our analysis, then stand on the sidelines and watch to see how price will actually react within these areas that we mark out. But currently we see it testing the area of 38.2 Fibonacci retracement, and also oscillating between the 50% and the 38.2 Fibonacci retracement areas. But the fact that it's coming within the area of weekly support and the area of the Fibonacci retracement levels, we believe that these will act as a strong confluence to stop price from descending downwards, and perhaps we would see it rise to the upside to complete what we know as an impulse correction, impulsive move to the upside. But for now, the best we can do is to sit and watch how price will actually begin acting within this area before we react to the actions of price, which makes us price action trader. Dropping to the daily. So taking a look at the daily, we're still on the German 40 or the DAX 40, which is a German stock exchange index. What we see on the daily is that price is currently testing this weekly area of support. Just clean it up a bit to make the charts more visible. What we see is that price had created an area of support here, which it was later able to break through impulsively to the downside. And now we could see the beginning of a correction to come and retest this area that has been broken, a previous area of support, but now turned resistance. Remember, when support is broken, it becomes resistance. When resistance is broken and price closes above it, it then turns support. Now, in this case, support has been broken, price has closed below it, and now when price is retracing to retest this area, it is now retesting an area of resistance. And so, once again, price moved impulsively to the downside. Now we might be at the beginning of the correct phase to come and retest this area of resistance. So we expect bullish moves in the market today concerning the DAX 40 or the German 40. For those that are used to indices, but not necessarily the German 40. Now the German 40, unlike the Nasdaq 100 and the US 30 or the Dow Jones, which are mainly volatile during the New York market, the German 40 is basically so volatile within the European session, since those are the most active hours of the German stock exchange. And remember, the German is the strongest economy in Europe. It is the biggest member in the Eurozone as far as economics is concerned, and so it tends to be volatile, it tends to move a lot, it tends to be a good instrument for trade within the European session and also come to London session. Now, not saying you cannot trade it during the New York session. Yes, you could, as the European session at that time is still open and running, but it's not as strong as the times when it is at its open. But yes, the New York session also has an impact on it in terms of increasing its volatility. And so you could as well trade it during any session apart from the Asian session. And so measuring this move from its peak to its bottom, what we see is that this area of resistance is the same area that is lying between the 38.2 and the 50% Fibonacci retracement levels, And so we would expect these two levels as well as the resistance area to act as a magnet to attract price, to pull it from the downside up to the upside into its zone, to form a correction after this impulsive move to the downside. And so as it stands now, we expect price to be bullish, to create the corrective phase of the market in the DAX 40 instrument. Now, dropping to the 4-hour, what we see in the 4-hour, remember we've seen the monthly as bullish, the weekly as bullish, the daily as bullish, and now the 4-hour, we see that price formed this W formation, and in the formation of this W pattern, it moved so impulsively from down here way to this level here, breaking above this resistance area here to form an impulsive move in the market. Now, after an impulsive move, we expect a retracement, and that's precisely what happened. Price retraced, and it is now testing this area of minor support, which is the neckline of the W formation, and in doing that, the W formation is completed. Once again, this was a W formation, and we had this retracement to retest this neckline to complete the W formation. Now, after the retest of the neckline, which was an impulse and correction, what do we expect? We expect another impulsive move in the market, and so we expect a bullish move to the upside. And if we are to measure the amount of the impulse and the correction phase in the market using our Fibonacci retracement tool, taking this instrument and drawing it from the low of the impulsive move to its peak, we see the price upon retracement after the impulsive move to the upside, it tested this minor support area. If I could just draw it out. And so it tested the confluence of this minor support area and the 61.8 golden Fibonacci ratios. Now, these two, the support area as well as the 61.8 golden Fibonacci ratio, act as a strong support area, and we expect them to strongly reject this price and have it ascend back to the upside to complete the impulse correction, impulsive move in the market on this 4-hour time frame. So what we'll be doing is dropping to the lower time frames and looking at this area here for the setups that meet our entry criteria, and we will be taking buy trades, looking to take advantage of the beginning of the impulsive leg to the upside at its earliest before the crowd comes in, and that way we are able to stay ahead of the 95% crowd and maintain our edge over these markets. So that's our analysis for today. The 4-hour is bullish, the daily is bullish, the weekly is bullish, and the monthly is bullish. And so we expect the completion of the impulse correction, impulsive formation in the 4-hour, and also similarly in the daily time frame, we expect this having been an impulsive move to the downside. We expect a correction to happen in the market, pushing prices higher so price can come and test this resistance area. Hence, also on the weekly, this having been an impulsive move to the upside, with this correction, we expect the beginning of another impulsive move to the upside. So the 4-hour is bullish, the daily is bullish, and the weekly is bullish, as well as the monthly. And so we expect bullish moves in the market today. Thanks for watching. You could visit Forex School Uganda for more valuable articles and content.